Welcome to the Business is War podcast. My name is Elliot Foreman, and today it's passionate for me to speak about financial intelligence and literacy and things that make your life better just because you have a better handle on your money. I mean, like, what are you doing if you're a 40, 50-year-old human being in America, in the greatest country in the world when it comes to being able to equalize the opportunity for income earning, your potential, et cetera, all those things? What are you doing if you're 40, 50 years old and you have not made financial stability a part of your core operating procedure? Today, I am joined by Wil Ballard, a financial professional who has mastered the craft of taking the incomes of everyday ordinary people and using it in their best interest to help them to secure their future, their financial independence. And so we welcome him to the Business is War podcast, and we say welcome.
Thank you. Thank you, Elliot.
So listen, why the taboo around financial professionals? I heard LeBron James recently say that he told his financial advisor he was going to kill him if he took his money or did something. You know, one of those type of things. Yeah. Then you hear the TOs of the world who say they lost all their money and things like that. And so I believe that you all have gotten a bad rap, because we only hear about the 1 or 2% that do the dirty work. We don't hear about the 98% of you all professionals who take the job seriously and do a great job of helping families to secure their futures. Right. So why the taboo around the industry?
Well, I mean, that started a while ago, long time ago. Back in the late 1800s, after slavery was abolished, there was this bank called Freedman's Bank.
I've heard of it before. Keep going. Educate me.
Yeah, Freedman's Bank. It held 60,000 Black Americans' funds in that bank. It operated for about 4 years.
Okay, so did it hold it in the right way or hold it in the wrong way?
It held it in the wrong way.
So you did just hijack people's money?
So, yeah, actually, ultimately what happened was the bank went under, and the majority of those people lost all of their money.
Where's the FDIC when you need it?
There was no FDIC then. The FDIC came in about 1932, 1933. So there was no financial protection for anybody back then. But that's where it's rooted. That's where it started from. Now we're
so we done got
slavery.
a bad rap from the jump.
From the jump.
So let me ask you a question. So, I mean, like, what was before the FDIC, implemented protections and consumer protections and things like that? What was there?
There was nothing.
So why would somebody put their money in the bank?
Why would they put their money in the bank? Because at that point in time, that's what we were told to do. That's what we told that our money will be protected.
So let me give you my historical understanding of banking. Okay. I believe it came about because if you think about it, every time you see a Robin Hood movie, they were robbing a stagecoach. So why would the king be walking around with all of his money and gold pieces, right?
Yeah. Well,
and fragrances and things like that. So you had to come up with some sort of a financial institution and bank it.
Yeah. Well, the king, he would keep his money in the castle.
Yeah.
The king, the only time he had his coins and his frankincense and everything else with him was when he was going to another kingdom to
trade,
make some type
to trade or
make some type of partnership. That's why most of the time it was in the castle being guarded by his guards, his highly trained
knights.
Exactly.
Right. So if you think about it, I mean, yeah, banking probably started off not necessarily in the greatest space, because obviously, we have some history that might not be.
Well, the history of us not trusting
financial institutions.
Not just financial institutions, people in general started way before that.
Yeah. Well, man, I think that's kind of unfortunate. But, as I frame that up, I'm moving towards thinking that maybe now we do trust financial institutions and it is a little bit better, but we still carry the black eye of the history of Black and brown people not being treated right by financial institutions, whether it be they don't qualify, they don't get opportunity or access, et cetera, et cetera, et cetera. So even I, in my current state, I'm not in love with financial institutions. I know I need them. I know I need partnerships. I can grow 10 times faster if I had them. Right. But we don't always have access to them.
Well, we do have access to them. I mean, it just depends. Do you want to pay for it? Like, everything costs. Like, this suit costs. Me sitting in front of this nice setup with you, it costs something. It costs something to somebody. Are you willing to pay that cost? Because in finance, actually, you're really not paying it. It's more like contributing or investing, because the money is yours and you're going to get that money back. Let's look at life insurance for an example. You get a whole life policy. you fund it properly, it builds cash value.
Okay.
That's your money.
Over how long?
Depends on how long you want to fund it. You can fund it for 10, 15, 20 years. You can fund it as long as you want. You can fund it to the day you die if you want. But the cash value continues to build. Now, at a fixed rate, it's not like we're putting it in the market unless you do another financial product that has the same protections as a life insurance policy. But we're not willing to make that first step. Somebody has to be the seed.
And so, unfortunately, the family dynamic is under attack, meaning that a lot of people aren't getting married. A lot of people aren't having kids.
That's very unfortunate. No, they're having kids. It's just having kids out of wedlock. Well, about 80% of all black kids are born out of wedlock.
Yeah, that's troubling statistics.
And that's crazy.
Yeah, it is crazy. But I read somewhere today that that older women are having babies more than younger women now. And I think that's probably new in the last 24 months. Let me tell you why. Because today's 30-year-old probably is just kissing the opportunity of stability, where back in the day, that might have been 25.
Right.
You see what I'm saying? Because today's 25-year-old doesn't look like yesterday's 25.
Well, because of most women are more career-oriented now, they're pushing back those having kids early because it interferes. Regardless of what anybody may say, having a child will interfere with your life. It interferes. It
is a major commitment.
It is a major commitment. Now we think going back into the early 1900s when there were a one-income household. The man made the money, the women kept the children at home. They had the children, raised the children, everything at home. They didn't work, but now they're in school. They're getting their degrees, and they're
racking up debt in the process.
They are racking up debt in the process. What we all are. But now they're entering in the workforce at an earlier age. Even in high school, you have kids that go work at McDonald's or places like that, and then now they go to school, they graduate, and these jobs they're kind of demanding. And then with the price of daycare, I don't know if you've seen those prices.
I know a little bit about some of those costs, but the child bringing into the world, relationship not working, and the career staring you down in the face, it has become tremendously more difficult. Yeah. And with access to birth control, we don't have as many happenstances as we did maybe in previous generations. So I would say that we've probably gotten better in a lot of ways, but the game looks different now.
It does look different now.
So with that, think about it. Back in the day, you're right. One dad could work at, GMC, Ford, or Chevy
and afford
an entire house with kids, a station wagon, and a white picket fence.
Sometimes another family on the other side of town.
I don't know anything about that, but I get what you're saying.
Talk about that.
Yes. So yeah, that's true. So now you got two income earning households that can barely make ends meet because the cost of living is just doing something very different.
Yeah.
I think that's interesting. So let's talk about, when is it okay to start investing? When should a person start investing? Now keep in mind, we just layered it with not everybody's going to be in a relationship. Not everybody's getting married. Not everybody's having kids. And that's normally what you do when you start. Remember, the business model used to be graduate from college, find a girl.
Right.
You find a girl and you get married.
Right.
Okay. And then you put a couple years into the relationship and you start having family planning. You start having kids.
Right.
Well, at the very beginning of that, you start putting away things. Remember how Gerber used to have that product?
They still do.
They were they still do the Gerber baby product. Listen, so what happens? They buy the product that when it's an infant kid, and then by the time they're 70 years old, they're billionaires or something.
Not necessarily like that, but you can do that with pretty much any company.
But tell me about that product. Is that really what it was? Because I remember.
No, it's a life insurance policy. No, that's what it is. This is
on a baby.
Yeah, on a baby. So you can get a life insurance policy on a child that's 15 days old.
Okay,
that's when it starts.
Okay.
See, financial planning doesn't start when you're in your 20s. You need to have.
But you got to pay for that every day for the rest of their life.
Yeah. But you have to pay.
And psychologically, to the average person, that doesn't sound good.
Well, okay, let's look at it like this. If you don't pay it, what's the cost? Think about how many
That's
people...
a 50-50. Nothing can pass in grammar school with a 50.
No, I agree
so
with
look
you
at what
on
you
that.
just said. You gave me the head and the tail.
You're right.
The taboo, the ugly part of that is we don't want to pay for something every day for the rest of a life.
Okay.
And you said, what happens if you don't?
Right.
I think that's with anything.
No, I agree with you. But look at how many. What's worse? Working your whole life and not having anything to show for it at the end, or paying for something when you first get here and being able to take care of a generation.
I mean, that is a no-brainer. It's like, okay, all right, damned if you do, damned if you don't. But I think somewhere along the line, we lost the family dynamic in a real way.
No, I agree with you on that.
So I'm saying that the average 20-year-old is not thinking about that. The average 25-year-old isn't thinking about that.
And I agree with you on that, because the financial literacy starts as a child. It doesn't start when you're 20, 21, 25 years old. It starts when you're a baby. That a sound financial plan for a family. And this kind of goes back to me saying that somebody has to be the seed.
Yes.
Somebody has to start that. Somebody has to start with their child at 15 days old and start the life insurance policy. And then you have life insurance on yourself. Now, most people, they have life insurance on their jobs, right? Mm-hmm. That's typically 2 to 3 times of what their income is. Now, if we're in a family, on average, let's say the family dynamic stays together 18 to 20 years. That's a lot of money. You make about, not you, but if someone is making, the average black man makes about $41,000 a year.
Okay.
Over 20 years, that's about $800,000, right? It's not a lot of money.
In this economy, no, it's not, because things cost so much money.
They cost so much, but what if that man dies? Now, we just got through talking about, we normally, in the early 1900s, there were a one-income household. We now have a dual-income household that's still struggling.
Yeah, they are.
So if something happens to one of those people, what happens to the household? The wife dies. What happens to the husband and the kids? The husband dies. What happens to the wife and the kids? Right? That's part of why we as Black America, the wealth gap keeps increasing. When somebody dies, right, we see people creating these GoFundMe.
That's not cool. Oh, you know what? But listen, back in the day, they was frying fish plates.
Fish plates and stuff.
Okay.
And all that's fair. But we know better now. We have the education now. We have individuals like myself who are willing and able to teach the public how to create money where no money existed. Right? Mm-hmm. So I'm not saying that there's no excuse, because the wealth gap is there and it's going to be there until we redirect.
You're saying the wealth gap by color code?
Yeah.
Unfortunately.
It is unfortunate. Black Americans make 60% of what white households make. On average.
Let me segue that just a minute. Dear America, black man, brown man, Hispanic man, Asian man, Indian man, whatever you are, even white man, you have an opportunity in this country to build wealth and to build a life worth living. You got 2 paths. You can choose the path of pleasure, or you can choose the path of purpose. And I've chosen purpose. And the reason I did that is because the last thing I want to do is drink the red wine and can't remember what it tasted like the next day, or eat the steak and don't even remember it the very next day. But I can remember the lives I've changed and the people that I brought with me on this thing I call life. And I say to you, don't let the statistics of you being 60% of the income of the person right next to you on the same street, living in a house that looks very much like yours. Master your craft, become an absolute expert at it, and let nothing stop you from getting what you want. Now, why do so many families distrust financial institutions?
That goes back to what we talked about earlier. Word of mouth is super powerful, right?
Yeah. Why is the hood rumor more powerful than, anything else that we've ever seen in our lifetime?
Because we're around the people in the hood. We listen to grandma. Matter of fact, let's go back even to to about the 1960s when we were allowed to start purchasing life insurance on our own.
So you're saying we've oh Jesus, say that again.
Around the 1960s when we were allowed to purchase life insurance. See, this redlining and all those things, slavery and all those things left a sour taste in our mouth. And every time we were allowed to start investing our money in banking institutions, purchasing life insurance, things of that nature, we were always for the lack of a better term, we was always messed around when those things happen. 60,000 people invested their money into that bank and they lost every penny of it. 60,000 Black Americans.
It totally went under?
It just went away. Just like did you get your 40 acres and a mule?
No, but
exactly.
But at the same time, I may be the descendants of people who probably deserve that.
Have you gotten your descendants 40 acres and a mule?
No, but you're ready for the killer part? Is that I decided that I was going to do something with my life around 27. Mm-hmm. I got out of high school, went to the military, tried a couple different career paths, and somewhere around 27, life started getting serious for me, and I'm thinking, this is looking like a pattern that I've seen before. And so I just said, okay, let me find it. I never saw you when I was 27.
Right.
A person with a financial IQ in a financial space. Right. I never saw you. So I need you to go and be everywhere you can be, even put a T-shirt on. And the reason I'm saying that is because if I knew that there was a career like yours, I might have maybe showed an interest to it because I've always had a financial aptitude, right? But the point I'm making is not every young Black man needs to be an athlete.
I agree.
Not every young Black man needs to be an entertainer.
And not every parent needs to push their children to be that. See, we do that everything starts when they're a child. You got football leagues at 3 years old, 4 years old, flag football, 5 years old. So we pushing, you go be an athlete, you go be Deion, you go be Bo Jackson, you go be Tom Brady, you go be Randall Cunningham, you go be those people. There are about 1,500 football players in the NFL.
Yeah, so
there are about 350 million people in this country, of which 13 to 15% are Black. So that's about 48 million people. Now, do the math here. 1,500 spots for 48 million people.
Yeah, so I mean that number in itself is already rigged game. So
right.
I don't even want to play that game, but I sincerely do understand, wanting to enjoy something or whatever, but I'll go back to my core principle that I don't believe that a man's purpose is to just find pleasure in life.
I agree.
And so to be honest with you, I don't care if I'm happy or not. What I like is being able to dig in my pocket and buy that latte for $8.
Right.
Okay, or going to work whenever I want to.
But latte makes you happy.
Well, no, it doesn't make me happy. It just provides a certain level of freedom.
Does coming to work make you happy?
If I could, I'd live here. Let me tell you why. Because I like being around my opportunity more than I do around, pleasure. And I hate to say that because what they say, all work and no play makes Johnny a dull boy. Right. Well, Johnny got some damn money. Yeah. Okay. And listen, the last thing I would want to be is uneducated and broke in America in 2026. Yeah. Because there's no place for Black Americans right now. Right. We don't. Where do you see them at in the market? If you walked outside on the street right now and just looked around, there are not very many Black men walking around unless they're driving a FedEx truck.
No, I agree.
And so if you're ostracized from the U.S. economy, if you're not participating in any of the other things that we talk about, I mean, you go to retail, it's all women, beautiful women.
Black women.
If you go to even medicine is the largest employer in the world, and Black men are a very small minority in medicine.
Yeah. Well, those are the areas that we're not pushed into either. We're not pushed into medicine. So let's answer that question. Where does a 25-year-old educated Black man that graduated from a local state university go to find himself a safe place to put 20 to 30 years of a career in and earn a living and build a family? Well, see, that depends on what he's good at.
I didn't ask that question about what he was good at. I said, where the hell does he go at?
Well, see, that's the thing. Most financial institutions, they not financial institutions. Most colleges, they teach you how to do a whole bunch of things, and then you end up specializing. Like you go 4 years. You've been to college. Yeah. My first couple of years in college, it was math and chemistry. I majored in computer information systems. What in the hell am I gonna do with chemistry, right?
Yeah. Yeah.
So,
but I think the idea is supposed to be to just trigger not only interest, but it also is to broaden your horizon, to introduce you to a bunch of different things. Right. Now, remember, I sincerely believe that the educational system did not evolve with the times.
I can agree with you on that.
Man, come on, listen. Ain't nobody got time for one teacher in a room with a blackboard, and you got 30 kids in the back that can't sit still.
I agree with you, but those are the smaller kids, right? No,
even in
how
college.
do we educate our kids then? What are we saying? Do we educate our kids at home?
I don't believe that the educational system has evolved with the times.
So with a dual income household, that means both parents are out the house. Where are our children supposed to be educated? And I know the education system isn't the best education system right now.
I'm willing to let the professionals be the professionals because I can't teach my kid to read. I just can't do it.
My mom was a teacher. My wife, she was a teacher. Now she's a school counselor, and she owns her own counseling practice. So I've seen it from both areas. Now me, just like you, I can't be a teacher. I understand I don't have the patience for the kids jumping around and stuff like that. But the kids, they have to be educated. And education isn't supposed to only be at school. Like when my kids come home, my wife, she reads with them.
We missed that whole
homework.
part. Listen, we missed that whole part when the two parents had to go to work.
Yeah, but after work.
Okay, so let me ask you a question. 2025, that was last year.
Right.
In 2000, John, 18 years of age. 2025, John, 18 years of age. Which one's smarter?
Probably John 2025.
The one as of today?
Yeah.
Why would you say that? I would disagree. I would strongly disagree. But why would you say that?
The reason why I say that because John 2020 was at home virtual with virtual school.
No. 2000. 2000, as in 25,
I thought you said
25 years ago, John at 18.
Johnny 18, 25 years ago is smarter than John 20.
The reason being is because now we're starting to fail to up-educate moving forward.
I agree.
So the kids aren't getting smarter with better access to information, better textbooks, better practices. For whatever reason, I'm not in the school and I'm not able to answer that question, and I'm looking for a superintendent that's willing to come on and we can have a healthy conversation about that. But trust me when I say that we're not up-educating the kids that we used to do back in the past for whatever reason. It's a myriad of reasons. But
again, education doesn't stop at school. It continues at home. We as parents, we are obligated. We are obligated to make sure that our kids understand the information, not just simply go to school and get the information. Like my child, he's in a French immersion program, right?
Okay. Now, when is he ever going to use French? I'm just asking.
See, this is the thing. It's an additional skill that he have that most black men never have. It makes him more marketable.
Okay.
Right?
Hey, look, I like it. Put the feather in the cap.
My wife and I, we were forward thinking with stuff like that. So when would he use it? Probably when we go to France. For the most part, that's when he would use it, but he's there, right? So he gets French at school. Now he might get it and he might be able to regurgitate it at school, but as soon as he get on the bus and start playing with the kids and start doing everything else, he forgets it. So when he comes home, we reinforce everything that he learned at school. So it's not just, you get an education at school, you get an education at home. You do your homework, we go over your work, and then if you have time to watch TV or play the game and stuff like that, you do that. You know, that's where the foundation of education is solidified in the household, not simply sending them out to school.
Okay, so you take full responsibility. You take full responsibility for your product because you're saying that we have to do our part. We can't rely on the school system.
We do have to do it.
How
you going to get a job if you don't put in an application? How are you going to get a job if you're not educated to do the job? Because one of the things that you said earlier, you were like, where does a 25-year-old man that just graduated school, where did he graduate from? What did he graduate in?
I don't know if it matters where he graduated from.
It matters.
I think that, listen, I know people with Harvard degrees and Yale degrees that can't get a job now.
No, I'm not saying that it doesn't happen both ways, because you can go to a community college and get $100,000 paying job, and you can graduate from Harvard Law and be a server. So I'm not saying that, but if somebody was standing in front of the average HR representative, this person graduated from such and such community college, and then this person graduated from this prestigious school, same GPA and everything else, who are they more likely to pick? I'm not saying exact percentages, but I don't know if there's a shadow government sitting there just going through the resumes like that. Because you know why I say that? Because Now, they might use AI technology to kind of skim through and bring it out.
I've always been able to get an opportunity because I was the hungriest person in the room.
When you put in your application, did you know somebody there?
No, I don't apply for jobs. Like, why would I apply for?
I'm not talking about now.
I'm saying even back in the day. I remember when I went to get a sales job at a car dealership. Mm-hmm. I went to the car dealership and said, "Hey, are you guys hiring?" And the manager told me, "Turn around." Looked at me like I was cattle and said, "Go home and put on a shirt and come back and ask me for a job." Mm-hmm. And I did. Mm-hmm. And I mean, like, what if that man never did that? What if he told me no? Mm-hmm. He didn't know anything about me. Right. I had just got out of the military. My arms looked like Popeye. and no, real talk. And he told me, go home and put a shirt on and come back and ask me for a job.
And you did it.
I did. It was very humbling for me because I was like, I can't believe you said that to me. You
got in your feelings about him telling you to come in and put on a shirt.
I want to tell you something. I was 25.
Right.
I was 25 years old, and I went to a Honda dealership. Mm-hmm. Can I get a sponsorship check for Honda? I went to a Honda dealership.
Please call this man. Please.
And I asked them for a job, and I want you to know something. They put me through the road to a sale. Mm-hmm. They put me through the 10 stages of getting a customer to buy, all that other kind of stuff. And I went through that, and it was eye-opening. It was one of the greatest experiences that I could have ever had been in business. Mm-hmm. And what I realized is presentation. I mean, I didn't have anybody telling me, "Hey, yo, put your pants up, boy."
Right.
So that's something I specialize in doing.
Right. Now, early off in my career, when I first moved from Monroe to Baton Rouge, I went to a job fair for a telecommunications company. In that job fair, there were people there with pajamas on.
No.
Yes. Pajamas. Now, look, the company is worth about $16 billion. Real. Well, they just sold, they just split, they got something going on right now. But it's a professional. You go to a job fair to get a job.
Yes, you do.
You don't get a job by looking like you just got out the bed.
No, you don't.
And sometimes, But
hold on. That's culture. Let me tell you why. Because I see people traveling in pajamas.
Traveling?
In the airport.
We can't equate traveling to a job fair.
I'm going to put them in the same soup kitchen. Let me tell you why.
I'm going on not holiday, but I'm going to Barbados with my wife, and I decided to wear my basketball shorts and a cutoff t-shirt.
I said pajamas and bonnets with the furry shoes. The same vibe that they would go to. And again, that's cultural.
Because no, I don't agree with. I don't want my wife to go out with a bonnet on. So
you can't. I don't even talk to people who, you know what I'm saying. Like, no, I'm not doing that. That's the same people that open up the takeout in the plane and got the whole plane smell like chicken. I'm not doing that.
You stupid.
Yeah, I am. I'm very stupid. I am. So listen, how many people die without a solution financially?
Well, about 44% of all Black Americans, and that's sad. Because the thing about it is...
Well, how much does a burial policy cost?
It depends. See,
you know what? You've answered that question like 10 times already and says depends. I need you... Listen, I'm a sales professional.
I know you're a sales professional.
I want you to give me a $9.99 or a $12.99 and give me a casket and give me a payment plan. But just say... Watch this one. Say $30. Ask you how much a credit card machine costs.
That's different.
Why is it different?
Because the age of the credit card machine don't matter. See, your age matters.
Oh, so you're using insurance risk factors on the cost of the burial.
Everybody does. Do you think a policy...
that's discrimination, brother.
It's not discrimination. It's a part of life. Whose mortality risk is higher? The 25-year-old that's in shape, that's in the military, or the 76-year-old that just got off the operating table from having...
Well, in 2026, that young man might be a dumbass, and he might be out there risking it all.
See, intelligence doesn't matter when you start talking about mortality risk.
So there's a risk factor that you guys equate.
All those things matter. So the insurance companies have come up with a way to take the propensity of what this person's life expectancy is based off their age, their gender, because it matters. Life insurance for me and you is more expensive than it would be for our wives. As it would be, I'm 46. It'll be more expensive for somebody that was 56. As it would be for somebody who had cancer, they 10 years removed at 46, versus somebody that never had cancer. See, all of those things matter when you start talking about insurance. It's not simply the reason why burial policies and child policies are so cheap, because they have little to no underwriting, meaning they don't look into your medical history. At 15 days old, you didn't have any complications with the pregnancy or anything like that. And boom, we're gonna give you a $26,000 policy for $15 a month.
Why would it cost you $25,000 to get buried?
Some people, okay, look at the cost of caskets. Look at what people do. They have second line. You got to pay for that.
Man,
that's not free.
I am getting ready to start me a new business. It's going to be called Bonita Funeral Services. Because listen, I'm going to buy me some land in the middle of nowhere. Okay, I'm going to start putting pine boxes together with lacquer on the outside of them, and I'm going to put some gold rails on them. Okay, the flowers are going to be fake.
Right.
And the policies are going to be $10,000. And I'm going to let you pay $15,000, and I'm going to pocket $5 per person.
That's exactly what happens. Think about that.
Why has nobody cornered that market and said, okay, I'm getting ready to be a disruptor in this space?
Disruptor in what way?
Meaning that they're going to drive the prices of burials down and the cost of caskets down. Why would they?
Why would I lose money?
Because they're on the outside saying that somebody can do this better than them.
Yeah, but doing it better and doing it cheaper, that affects my
That's
pocket.
called commerce, and that's called capitalism.
Now, don't get me wrong. There are some people out there who do that. Now, the average funeral cost is about $9,000.
Man, listen, I saw a bus last week that said $12.99 for a cremation.
Yeah.
So how you get the $9,000?
Well, I mean, that's what I was going into.
See, the last church I went to, the pews was in there since Martin Luther King was preaching.
Yeah,
so I need you to tell me where the money goes.
But some churches charge you to have a funeral in the church. That costs. Everything costs. Everything costs. It is going to cost you. You are a boxer, right? To be as good as you are, what did it cost you? It just didn't cost you time in the gym. Right. It also cost you getting punched in the face sometimes, right?
That's right. That's right.
So, and those are the costs that we don't factor into to life, period. Like if you sit down and do a financial plan with me, you'll tell me about the big stuff, your mortgage, your car note, stuff like that. But we overlook the Netflix. We don't have Blockbuster no more, I'm telling my age, but we overlook the Hulu. We overlook these other charges that we have. That
cable bills, utilities, cell phone bills,
all the little, no, those are big things. Cable, utility, stuff like that. Everybody's willing to tell me those stuff. But the other things that they have that they don't want to tell you about, those are the things, those matter too. See, our problem in the black community isn't that we have money. We account for $1 trillion of the GDP. 1.8 trillion. Our problem is we need to redirect where we spend our money. Instead of going to Starbucks every day, which is about $7 or $8, go buy you one of those Folgers Gold and whatever. I don't buy coffee, And every other day, make you a cup of coffee and take that money that you didn't spend at Starbucks every other day and invest it in something. Do that.
See, you talking discipline now.
Yeah. Okay. So how can you we talk about black excellence. How can you have excellence without discipline?
I'm going to answer that because I know how I can camouflage it. And the way that I've been able to be successful is through obsessive compulsive behavior.
That's discipline.
No, that's drive.
Yeah, that's drive. But there's an element of discipline in drive.
Discipline is you don't have enough money to eat fancy, so you make your lunch. Mm-hmm. And you manage it on a spreadsheet. Mm-hmm. Okay? Mm-hmm. I would say just go back to work and never go home.
Yeah, but see, your drive would make you be disciplined. Because drive would make you know what, I want to go to Houston's. I want to go to Roof Chris. But I see the bigger picture. So instead of me going to Roof Chris or going to Houston's, I'm going to go in here and I'm going to eat leftovers from last night so I can keep this money so I can invest it in this REIT, this real estate retirement investment trust. Or I can invest in this ETF. Or I can buy these stocks or whatever. Or I'm going to make time where I go see a financial professional and sit down with him and talk with him about what it is I need to do to be financially successful in my life.
So listen, when did insurance start becoming a wealth building program?
It's always been a wealth building program. It's the foundation of wealth building.
Well, listen, not for the person that's actually buying the policy.
It is.
Well, I mean, what if he died? Then it's going to the next generation.
See,
we talking about heirs. So again, the question was, has since the very first insurance product, did it, you know what I'm saying? Was there a small subtle shift?
Well, the first insurance products, not giving the exact story, but it was when they were bringing slaves and stuff over here. We used to be slaves.
Jesus.
We've always been property, and we were insured. We were insured.
Don't say no we, because I only started 25 years ago because I'm a kid.
But we were insured. So if something, when those boats sank and stuff like that, the people that own the boats, they got paid for our deaths.
That's just something.
So it's always been a part of wealth building. If I invest in these people, if I invest in this car, I invest in this house. If something happens to this house, this car, these people, I want to get compensated for it. See, insurance is just a transference of risk. If I don't have insurance, then the risk of me having an accident on Porters is all on me. But if I have insurance, then the risk of me having an accident is transferred to the insurance company, just like life insurance.
Well, more people have car insurance and health insurance.
That's mandated.
Correct. Than life insurance
and that's sad.
Well, yeah, of course.
Because people don't believe in life insurance based off of some of the things that we talked about with Freedman banks and
the taboo.
They don't. But we talk about legacy, we talk about black excellence, and we talking about building wealth, but we don't have the foundations of what builds wealth. Right? Generational.
So you
wealth.
really feel like an insurance product, an investment product, is the foundation of wealth building?
You have to protect the money.
Now, what if I push
the money.
What if I push you back and say that you got to learn how to make it first?
I agree with that, but you don't have to have $1 million policy while you're making the money. You can have
that's the understanding that you have to establish to people right there. I'm gonna say it again. You just said you don't have to have $1 million to be investing, so that you can get to a product that's worth cashing in at some point.
Right, because you can get multiple insurance policies. 21 years old, 25 years old, get you a $20. $250,000, $500,000 policy. You are now on the road to creating financial stability in your home. And what I mean by stability, you at 25 years old, you get married, right? And it happens. On average, over 180,000 people die a day on average. So it happens, whether it's infants or the 90-year-old World War II veteran or whoever. People are going to die. Building financial wealth through life insurance means that you might die. It doesn't matter if you get the money or not, because you're dead. You can't make no more money. Mm-hmm. You don't see the sunshine no more. You're gone. But you leave the legacy on to your wife and your children. You make sure she's protected, or whoever is over your estate, you make sure that they're protected or they can pay for it. Because another part of sound financial planning is trust and wills. Reason being, if you could have $300 million in your bank, you don't have a will, guess what? The courts decide where your money goes.
And that's the probate conversation,
that's
right?
That's probate.
Okay, but there are some simple laws, like if you're married, your spouse or next of kin and stuff like that, right? But they still got to go through a process, right?
Yeah, there's a process, and you have to pay for that.
You know what? Ain't nobody just planning on dying.
Nobody does. Nobody, I mean, if you could go back and ask people, did you plan on dying today? I guarantee you the majority of them will say no. I did not plan on dying today, but you did. Now, did your wife plan on you dying today? No. You've created a family based off of both of your incomes, where now half of that is gone. How do you expect them to keep going? How do you expect them? Now, I'm not talking about for the more affluent people, but they need life insurance too. Because why would you spend your money when you could get the money and they could keep your money plus get the money from the life insurance policy? But if you have a house,
I'm gonna tell you why. Because if I'm married, I don't want my wife going on and using my money to take care of somebody else.
You know what's crazy about that? One of the things I hate it. I absolutely loathe when people say, I don't want my spouse, my child, or whatever, I don't want to make them rich.
Yeah,
And
I can't even understand that.
And as a black person in this country, in a country where we make 60% of what the white households make. That's disheartening.
Because let me tell you why. You're using real information to have a real high level view of it. Because most people can only see the ground from where they stand.
I agree. And that's why one of the things I was telling, I'm not going to call them children on the corner, but I was talking earlier, what sets me apart from other people is that I'm bound by the things that I say. I'm not just an internet 15-second type person. See, if you look at things like that, they have for educational purposes only and for entertainment only and stuff like that. When I sit down with my clients, when I have this conversation with them, I'm bound by the things that I say.
Yeah.
That makes it different. I don't give you in this platform, in this area. Yeah, most of the stuff I'm going to say is general because I need to say the meat and bones for my actual clients. But when you hear the 50,000 foot, buy this life insurance policy, buy this life insurance policy, $1 million life insurance policy, and it'll pay you such and such amount of dollars a year for the rest of your life. Okay. Is this person a man or a woman?
Yeah.
How old are they? Can they afford this policy? See, everything costs. That policy is not free. That policy is not free. Are you going to fund it properly? Can you fund it properly for the amount of time it's going to actually take for you to get that $50,000 a year for the rest of your life? See, all of that stuff matters.
So let me ask you a question. How does an instrument know how much it can perform and how long it's going to perform and things of that nature? I mean, like the idea of just, because there was a Bernie Madoff conversation. There was an Enron conversation. And so people have a little bit of honest distrust that's
it comes
deserving.
from stuff like that, yeah. So it's not just us doing it. So
when you have $150,000 in your 401k, because that's a not even self-directed. It's a part of the job benefit. They did a matching program. How long does the average 401k require you to keep it in there? It's a 20-year thing? What is it?
No, it doesn't require a specific time. Yeah, but it depends on where now your job, the when you do what is called like an employee whole life, not employee whole life, but when you start talking about employer plans, now they might require you to do some stuff like that. But you can take the money out when you want. Now, what the problem is...
Yeah, the penalties come with that.
There you go.
So you can't take the money out, because why would you take 30% of what you put in just because you need access to it right now?
Depends on the emergency. People do it every day. It depends on the emergency.
And that makes the financial institution rich and not the policyholder.
Well, the 10% tax penalty is for the government. It's not for the...
Oh, there are penalties and fees if you draw down on your 401k.
I agree with you on that. But that's what sound financial planning comes from. If you got a sound financial plan in place, you got 6 months sitting over here already. You don't even need to go on your 401k.
Do you think the average American citizen has 6 months in reserve right now?
The average don't. Most of the time they can't afford it. But this is the thing. This is where sound financial planning comes into place. It's called a 5-5-10 method. 5% of your income goes into savings.
Let me get that right. Take it out. 5-5-10. Go ahead.
Yeah, 5% go into savings, right? 5% on life insurance, and 10% on your long-term goals.
Now, you just said that if the average household that's black or brown makes 60% of its counterpart,
right,
then that's a real hard thing to do.
Then don't live above your means.
Don't live with discipline, right?
Let's go back. Like, all of these things matter. When we're having this conversation about wealth and black wealth in this country, all of these things matter. If you're undisciplined, You had a show a little while ago with this guy, and you asked him, "What's worse?"
I'm gonna do it for you. What's worse?
Go ahead.
Making $1 million and losing it, or never having made $1 million at all?
What I will say is making $1 million and not teaching more people how to make that $1 million. And the reason why I say that is because if you're talking about individual, Because we're talking about black wealth, not just one person.
So you've kind of put the tribe on blast when it comes to the black wealth disposition.
When you look at other cultures, what do?
They circulate their dollar within each
other.
themselves.
Not only that, when they bring their children up, their children stay with them till they 18, well, not 18, past 18, till they 20, 25, 30, whenever they get married. What do you think those children are doing while they still living in their parents' house? They're building wealth. I don't have a mortgage. I might have a car note and insurance, but I don't have all the other things that come along with living life.
Oh my God, that's tricky. That's tricky.
No, how is it tricky?
I'm gonna tell you why. Because culturally, we've done a number job on our own race.
Oh, I agree with you on that.
Meaning that
at 18, we kick them out.
I ain't even going that far. Meaning that there are only two colors of people in this country that throw mama from the train when it's come time. You know what I'm saying? The Asian people, they don't just push the wheelchair on vacations with their elderly. They bring them into the house. They're it's a part of their culture.
Right.
It's different. But Americans are just different. We don't celebrate our elders the way that we should.
In some cases, I agree with you.
Well, I have a pretty good foothold on things, and I'm saying to you that if I look at the black household and I look at some of the white households that are really American, I mean, we got some generational damage that's been done.
I agree with you.
And so how many? You just said that a large percentage of black families aren't. There's not a man in the house. It's a single parent house or whatever. So what that's going to look like when dad hits 75 or mom hits 80.
75.
You know what I'm saying?
Yeah.
We wasn't raised together kind of thing. So, you know what I mean? Like, well, I can mail you a check.
Yeah.
I might be able to do something for you, but that's the cultural disposition that I speak of all the time when I say that some cultures do the elderly thing better than the American way. And and so then there's that. But let me ask you this. Who is your perfect client right now?
My perfect client is a business owner.
Okay.
They, in most cases, they already have the financial discipline to create a business. You need discipline to create and orchestrate and execute a sound financial plan.
Okay.
So they have the discipline. They may have the income. Now, see that you don't have to do everything all at once.
Okay.
You can start off with life insurance. Now, my approach, because I like doing tax-free strategies, that's my approach. Keep all your money. You don't have to give Uncle Sam nothing, right?
Why do we call him Uncle Sam?
I mean, because everybody called him Uncle Sam. We were told to call him Uncle Sam, just like we were told don't trust life insurance.
He ain't my goddamn uncle. So go ahead, finish it.
Right. But a business owner, because this is another thing. Our business owner, 1 in 3 business owners have life insurance.
So 30%.
In their company. So you can have a life insurance policy for your company that's dedicated to your company in the event you or some of your partners may pass away, because you need insurable interest in the person that you get insurance on. Now, they do have to sign off on it, but like if you had a partner with your business, you could get a $2, $3, $4 million policy on this person because you might be the marketer. You're the face of the business. The business. This person does the grunt work. They go out and get the clients and stuff like that. They're the behind the scenes person. So you need to replace this person because you're doing your job. And how much money does it take to replace this person? Right?
Yes.
So those are the type of people I'm looking for, because having a financially sound business plan includes life insurance and investments and protection for the business to live on well after God has called you home. Okay.
All right. So your ideal client would be a business owner, but you do have something for people that are not business owners.
Of course. Now, I have experience with all walks of people, all cultures, all income brackets of people. When we have the conversation, when we set the appointment, when we sit down and we talk about your goals. Now, I'm not going to beat around the bush with you. If it's something I believe that you can't afford, then we might need to redirect.
Because it gets tricky, because look, times change, people change, circumstances change.
Yeah.
Not everybody is going to be rock solid. Because remember, you ain't working at General Motors for 20 years.
But you don't have to be rock solid to start a plan. It's a plan.
But it does require contributions on a consistent basis.
But see, we one thing that
so you got to debunk that theory. So I mean, because right now, when I hear a 20-year plan, I mean every month for 20 straight years, people get scared of that.
Why? It's your money.
No. We ain't talking about me. I'm saying to you right now. Imagine somebody told you you can have cable TV, but you got to pay $20 a month for the rest of your life.
Mm-hmm. $20 a month, that ain't.
Oh, no, listen.
Yeah.
They'd be like, wait, no, I don't want to do that. You know why? Because the idea of that long of a commitment scares people. Now, the way that the cable company gets you is they say, hey, man, here's this satellite dish, and we can give you the same, we're going to give you this for 24 months. Mm-hmm. And then we'll keep, before you wake up 10 years later, you've been with the same company. Mm-hmm. But that's how it works, because they figured out a way to communicate to the urgency of here and now and not the long-term benefit of it.
Let me ask you something. This is a shorter time frame, but it kind of goes along with what we're talking about. Would you rather me give you $1 million today, or I give you a penny compounded over 30 days?
I don't know what the math is, but I would really like to do 1 penny compounded every day for 30 days to see what it ends up. I know it's going to be more.
It's going to be.
I know it's going to be
substantially more.
I know it's going to be more, but look at what I just did. I just said that the person today doesn't want the long-term commitment. They want the here and now and the easier commitment.
I understand that.
And so I'm saying, yeah, get a person the penny, but just figure out a way to make it sound better. I hate to say that we got to do that, but here it is. If you know how to really communicate to your customer, that's why I said, man, if I started a funeral service right now, I would rack up policies. I'll tell you why, because I would put icing on the cake.
Right.
I wouldn't just give them a big ass cornbord piece. You know what I'm saying? I would make it make sense.
Right.
And I would disrupt the industry, because now I'm about to get into the good old boys club and all the old Paul bearers.
Well, no, you'll be fighting the good old boys.
Listen to me. Every industry got a front door, and somebody done kicked it down.
Yeah, somebody done kicked it down. But going back to what you say, I have to formulate it in a way which is acceptable to Black America to hear. Well, Black America got to want to hear it first. Well, right? Because think about it like this. We talking about over a 30-day span. You take a penny, it's like $5.3 million.
Like I said,
compounded.
I would have liked to done the math myself.
Yeah.
But I would have picked the penny. But you got to understand something. I know a lot of people that'll take the million, because my people and our people perish for lack of knowledge.
Right. But you got to want to know the knowledge first.
That's why I said obsession. That's why I said it. That's why I said obsession.
You got to want to know it first. Like I call people all the time. I call people every day. And
what do they say?
I don't have time.
They don't have time.
I don't have time. I got something else to do. Not necessarily I got something else to do. Let's talk next week. And see, those are the other costs that we don't understand, because earlier we was talking about a good time to invest, and I said as early as possible. The difference between investing at $300 a month at 25 years old to retirement versus 45 years old to retirement, on average, would be about $500,000 difference.
Let me get my phone. No, I'm going to show you something. So if I'm sitting here looking at my calculator, and you told me that I can get a policy for $19.99 a month times 12, it's $240 a year. Okay, $240 a year times 10 years is a $2,500 product. That's a 10-year term policy. Okay, your company doesn't want it one time. But you can call me any day of the week and I give you $2,500. But if you told me that's going to carry me for 10 years, I'll take it. But watch this. That's not what you sell. You sell the $19 a month.
I sell it all.
No, just think what I'm saying. I'm saying to you that you should tell people that they got a however many $1,000 policy for $2,500 or even $19.99, whatever the number is. The reason I'm saying that is because that's what Walmart does. They give you the deal and they put it into a nice package for you, but at the same time, it might be cheaper for you to go another way.
Yeah, but we're talking about they put it in a package for you. You get this heater
For 1999.
For 1999.
Hold on. Let's go back.
Mm-hmm.
Why was Rent-A-Center the worst thing that happened to Black America? But at the same time, they made millions off of the weekly payments.
Look at the interest rates on them.
The point I'm making is they were successful because they knew how to communicate to the audience.
No, they were successful because your payments were cheap.
That's all I'm asking.
Yeah.
Give them cheap payments. Give them life insurance.
You can get cheap payments when you're young.
You're young. I gave you the whole game just now.
No.
I think I'm onto something, and we might have to do some disruption work.
We can do disruption work,
but think about
the
that.
numbers are the numbers. The numbers not going to
Rent-A-Center made millions.
Rent-A-Center made millions
selling couches by the week.
Right, and those when they bought those couches, were they brand new or were they used?
Shit, listen, they might have been used couches, bro. Listen to me.
If they was,
listen to me. Somebody could think about what I'm saying. All I'm saying is that the presentation is everything.
I agree with you on that.
All right. So listen, trust or no trust? What family needs a trust? When is it good to get a trust? What's the financial benchmark to hit that you actually need a trust?
Every family needs a trust.
Every family needs a trust.
Every family has some assets they need to protect. Matter of fact, you can use a trust to own your assets, and you technically don't own anything. The trust owns it, and it's easier to pass down to generations that way. If you have a trust that owns your car, if you die, the trust owns the car, not you. So you don't have to go to probate court, or your house, or land, or your investments, or anything like that. That's why we need trust. It's one of the saddest things in Black America is when mama, pawpaw, somebody died, and the family is fighting over what they left.
To be real with you, I've been around that movie, and I didn't want anything to do with that movie because not only did they get what they were fighting for, but it didn't improve their life.
It's not going to improve their life.
And none of that stuff. And what I like to say, look at me now. The point I'm making is,
but it fractures the family too because it's stuff.
I don't have time to be arguing over grandma's house.
Right.
Okay?
That you're not going to even live in.
No, I'm not going to live in it. But the reality is that I like the idea of a trust because I do know a family that was in a very affluent neighborhood that came into a lot of money, and they bought a lot of stuff, and the lawyer ended up with all of it.
Because they didn't have a trust. They didn't have a trust. And the thing about that is the families that know, they have a trust for legacy.
Yeah.
Not simply just for their stuff.
But that, again, takes a real, true, forward-thinking person.
It takes a seed. I keep going back to that. It takes somebody.
Do you think everybody in every family has one of those?
A seed?
No, one person that's forward-thinking that can actually see the bigger picture.
Somebody has it. But whatever.
Hey, hold on. Let me combat that and say I knew a family that was criminals, and every one of them was a criminal.
They could all be criminals. That don't mean they're not forward thinking. That just mean they're criminals.
Okay. So listen.
They need to redirect their mind to.
And you know what?
I
say that to people all the time. If you can sell drugs, you can sell water bottles.
Oh, yeah, most definitely.
But nobody wants to hear me say that. And I've even gotten some pushback recently from people saying that I should not be agreeing with Donald Trump about him killing cartels and stuff like that. Hear me clearly. Killing somebody is never a good thing. But when did we start giving refuge to the drug dealer? That's all I'm going to say. On that note, tell my audience how they can reach you.
You can reach me. My phone number is area code 318. I'm a Monroe boy. Area code 318-680-9189. You can email me at ws.ballard@ft.newyorklife.com. Facebook, Wil S. Ballard, New York. So those are the places where you can reach me.
Okay, so listen, the purpose of this show today was to just talk about financial literacy, about investment strategies, about policies, and a million different things that you can do to secure your family's future moving forward. I am always going to be on the side of financial literacy and working harder to obtain more in your life and to live a life on purpose worth living. Please, please, whatever you do, be deliberate, be smart, be anything you can be and you want to be, because YouTube is here, Google is here. Chat GPT is here. You don't have to struggle with lack of information. Get it now. Do it together. Bring somebody with you. Get you a friend and a family member or somebody, and start an investment strategy. Do whatever you have to do to make your life better, because you only get one. And trust me, no sooner than you're 25 today, you'll be 35 tomorrow.
Thanks.
It happens that quick. Well, until the next episode, thank you, Wil, for joining me.
Thank you for having me.
And we will see you on the other side. And remember, always protect yourself at all times, because business is war.